Hello everyone and welcome to today's daily report market videos with me, Richard Perry, market analyst at Hantec on Wednesday the 17th of July. Looking at markets, there's a very much of a consolidation theme going on today. We had a fairly strong dollar yesterday, coming on the back of the US data which came out positively. The retail sales and also industrial production numbers came out positively for the States, and that helped to boost the dollar. However, that dollar boost has been tempered slightly as the Fed Chair Jerome Powell has once more reiterated the fact that the committee stands ready to make a move, really, and to act as appropriate, in his words. And so subsequently, the Fed is still fairly nailed on to cut rates at the end of July, and this positive dollar data doesn't really make a great deal of difference at the moment. Certainly the great cutting cycle seems to be on the way, but I think it's just a little bit of choppy noise within what's likely to still be a range play on the dollar, as you can see here on the trade weighted over the past few months. In terms of the moves across majors today, nothing really doing in terms of direction on the G4 majors. Euro, sterling and also the yen basically flat on the day. A little bit of upside move on or rebound on the Kiwi dollar. And that has just taken back towards 67.20 area basis of resistance. But nothing too decisive in terms of direction anywhere. You've seen the slip back on gold, back under 1410, not a million miles off 1400 again, which is still seems to be as a bit of a technical gauge. I think 1400 basis of support on gold. Talk about the implications of that on the chart analysis in a bit. And what we've seen is this consolidation which has started to come into treasury markets. You can see the yields on the 10-year and the 2-year basically going nowhere at the moment, and that's symptomatic of this these forex markets in the last certainly today anyway. Interesting that we've seen just a slight rolling over of the S&P 500 from all-time highs. A little bit of a slip back, and what we have today is basically just a consolidation of that move, and that slip back has been reflected through the European market moves early morning today. In terms of data points today, we've just had out the UK inflation numbers, basically bang in line with expectations. Nothing really surprising there. The only real aspect I think could be a driver is the fact that the input prices, PPI input prices, that's factory gate inflation, just falling now by 0.3% on the year, and that has just been seen as a bit of a drag back on sterling once more, sort of 5-10 pips down on the day now, having been flat earlier. So what else have we got? Well, the Eurozone final HICP numbers expected to be reiterating the flash numbers at 1.2% on the headline and 1.1% on the core. And then into the afternoon, we've got a bit of housing data for the States, the building permits at 1.3 million, again, basically where we were last month, and again, the housing starts. So nothing really doing there. And on the oil price, we're looking out for the weekly crude stocks. We're looking for another inventory drawdown of 2.7 million barrels. So will that help to support the oil price this afternoon? Okay, so onto my charts today. Euro sterling had a breakout. Sterling had a significant move to the downside yesterday. Euro sterling in the last week or so had been consolidating sideways, but now we've just accelerated once more away from this uptrend, and it certainly looks as though the market is going to be testing this 91 big figure level. Now I can zoom out and show you the importance of that. That goes back to August and November, December, that resistance, and that was a key level in terms of the rally on euro sterling before the market fell over. So big overhead resistance there. You've got the strong technical configuration on momentum. Look at that RSI holding consistently above 60, moving towards 70. Spent May and June above 70, so there is upside potential if this gets going, and certainly the stochastics look as though this is one to be going with. You've still got upside move on this morning, and I think a retest of that 91 figure level is certainly on now. You've got a breakout support, 89.50, up towards 91.10, so a nice band of support in there to be using as a buying opportunity if you do get an intraday slip back. But I think corrections are a chance to buy on euro sterling, and it certainly looks as though there is further gains to be seen. As I said, 90 9010 being that breakout level of support. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Please don't forget to go onto our website where you can sign up to our trading webinars, but also you can subscribe to my daily videos by clicking here. Thank you very much.